How's it going, you guys? My name is William and welcome back to my YouTube channel. Today's video is going to be about my Robinhood portfolio recap number 3. It is the weekend, the market is closed now, and I wanted to just talk about what I did this week, what I also plan on doing next week in terms of my recap and what I plan on doing for next week. So I already started a little bit for next week. I sold my 2 put options that you guys saw in last week's recap, and I opened up new put options on AMC. So I put 2 more put options, one on AMC for $9 and one on AMC for $8.50. They both expire on the 16th of April. For the first one, I was able to sell it for $41 and I've already gotten $2 back in return. For the $8.50 put, I sold it for $23 and same thing, I made $2 already. Even though AMC is kind of down right now, it's down to about $9.34. I don't think it's going to hit $9 by April 16th. I mean, for the past month, they have been down quite a bit from about, $14 and then $13 and then $10 or so. In the past 3 months, though, they still are up. So I do believe that they are going to be able to bounce back. There are these little dips where they go down a little bit and then they kind of flat and then kind of back up. I do believe that AMC will do the same thing. They're kind of going down just a little bit, and then hopefully they'll ride the wave back up just a little bit to stay above the $9 by the 16th. Obviously, if AMC does go down below $9, I might get assigned, and I might also get out of the option contract even if I lose money. I'm not too sure, but that is why I have 2 contracts at different strike prices, one for $9 and one for $8.50. The $9 or the $8.50 one is protection basically. If AMC does fall down to say $8.80, I will likely get assigned the $9 contract, but I won't, at least likely, I won't get assigned for the $8.50 strike price. That way all my collateral isn't straight put into AMC. AMC, they're a good company, movie theaters are awesome. They're going to be opening back up soon, and, people like entertainment. So AMC is a good company, I do believe, but having, almost $2,000 locked in collateral and then put into AMC would kind of suck, especially since I don't have that much equity put into any company except for maybe T-Mobile, but I don't even have that much. My collateral that is in AMC is about $1,700 or so, maybe a little bit more, and that's a lot of money. So that would be the most money I would put into any company so far. So I definitely don't want to have both of those assigned, but it all just depends. So during the week, Hormel has been going down quite a bit. Past week, they went down $1. $1 doesn't sound that bad, but when you own 15 shares, that's going to hit you hard, and it kind of did. $20 is not a big deal, not a whole lot, but it is the fact that I'm still down. They're one of the companies that I'm down in. I was able to still buy some more shares I bought a little bit below my average cost at $47.69, and then I bought a little bit more as well at $46.11, bought 2 more, mainly because I didn't want to be that negative in with Hormel. Hormel is a pretty good stock. They're pretty stable. They haven't really moved a whole lot. I mean, they have some ups and downs, but not a whole lot. The past 3 months, as you can see, they've been right around that $48, $47, $49 mark. And in the past year, one whole year, they're pretty much stable, even compared to last year, obviously. Their high last year was about, $50. I would say $52. And the past 5 years, they still have grown. They didn't really get hit that hard with the pandemic, so they are a pretty good, stable company. They pay a good dividend. They paid 24 cents per share. At that time, for the ex-dividend date, I only had about 2 shares, and now I have about 15. So if I had 15 shares at 24 cents, that's about $6 or so. So about a quarter per share. So, I mean, that would be pretty good. They're pretty much the only company that I've been losing money on a little bit. Apple has gone up quite a bit this week. $2 just on Friday and $9 in the past week. It's good that they're making me money. I wish I would have bought a little bit more. I do have 5 shares. That's quite a bit of shares for a company that is over $100. Same with Microsoft. They made me quite a bit of money, and I wish I had bought a little bit more, but they're really expensive, $250 for one share. I mean, that's a lot of money. I have already $500 in equity just into them. So, like I said, $500 for 2 shares, and I have about 1.2k in AT&T, and I have a whole lot more shares in AT&T. So they're easier to buy. They're not. I mean, Microsoft is probably a little bit better than AT&T. It's just the price. They're really expensive. And that's pretty much it for the recap. Like I said, I bought these 2 other AMC options. I did find some other REITs. I found apartments and LTC. These are both some more REITs. I was planning on buying a couple of these for the preferred apartment communities. They pay a 6.76 dividend, which is a pretty good dividend. They're pretty cheap. Past month, they've been down just, a couple cents. That's not bad. Past 3 months have been up by $2 a year, $2, and 5 years they're down a little bit, $2. But as you can see, they are kind of going back up. They were once about $20, so about double the price. I do plan on maybe buying some on market open, or maybe when I get paid again and can buy a little bit more. Same with LTC properties. They are not, they're pretty flat, right? 5 cents in the past month. Past 3 months though, $4. Past year, 5 years. So they did obviously get hit a lot last year, but they are kind of slowly recovering. Their 52-week high is 44.73. So that's not too bad compared to the last year or so. So they are pretty stable, pretty consistent compared to last year. So I do plan on hopefully buying some of those too by the time I get paid next week. I do have some buying power, but I want to save some of that for companies like Hormel that did happen to drop a little bit. And now they're the only company that I'm negative in it. I don't want to put in too much in because I only have that much buying power until I get paid next week. But that's about it for this recap. Past week I've been up about $46. Past year, up $700, almost $800, which is pretty good. About an 8% return, which is pretty what you would expect in a normal market. Obviously last year was a little bit different, and I didn't start buying until a couple of months ago. If I had bought at the beginning of the pandemic and was smart and not scared, I probably would have made probably about double of the amount of money. But, it is what it is. I can't go back. It's whatever. I'm still up. I'm still grateful for being up $800. And, in the past month, 3 months have been really, really good for me. So, yeah, thank you guys for watching, and I hope you guys enjoyed.